What is going on YouTube, guys? It's Brendan from Market Makers. It is a 10 o'clock p.m. broadcast, 22 hours for my European, Asian, and Latin American friends. Had a very busy day, guys, watching the market all day, and I'm packing as well for my move at the end of the week to South Florida. But I wanted to get this video out for you guys. I got a full plate for you. We got Bitcoin, Ethereum, Equities, commodities. I got it all in this video. I'm going to show you the primary charts that I'm tracking, looking at the price action. And of course, guys, we're going to cover the news and key events that you need to be made aware of to trade in this environment. Guys, you want to trade with us? The join button right underneath this YouTube video brings you to our Discord with 11,000 other traders. Love to have you guys there. The Telegram just for trade signals is in the video description, as well as the links to our two fantastic sponsors, BITGET for all the cryptos and SimpleFX for equities and commodities. Their links in the video description with the bonuses as well as a tutorial video. Let's go ahead and jump into this. Guys, let's kick this off really quickly with some news. So tomorrow is the first really big day for tech. We have, who do we have tomorrow? We have Microsoft and Google reporting tomorrow. Microsoft and Google. This is going to be a very key event. Now, just these five companies, Apple, Microsoft, Google, Amazon, and Tesla, they weight 41% of the NASDAQ. 22% of the S&P. That's their weighting, okay? They're overweight. So in other words, if these five companies do really well, that's 41% of the NASDAQ that's doing really well. Now, Tesla already reported. Tesla had to sell Bitcoin just to have free cash flow. So Tesla's done. The stock rallied a little bit, petered out. We got to see what happens with these other stocks. Snapchat was the canary in the coal mine. I personally think you're going to have disappointing numbers from Apple. I don't know about Microsoft. I think Amazon may be neutral, slightly disappointing. And Google will be interesting as well. So let's see what happens with these guys. But again, and then we have Meta. Meta used to be one of the top five, but obviously their stock is down like over 50% or close to 50%. So they lost half their market cap. But Meta is also going to be reporting this week. So these are the key companies to watch because that's going to control the direction. Now on Wednesday, the day after tomorrow, we have the Fed raising interest rates. Again, widely forecasted, widely believed it will be 75 basis points. If they come out with 100, the market doesn't have that priced in. The market has 75 priced in. Have to watch that. More importantly, have to watch what Powell says for guidance. In other words, the Fed is off in August. Okay, they get to go on vacation. So people want to see what Powell's going to say. Is Powell going to say something hawkish to the effect of, if the CPI print is still hot going into August, they'll do an emergency rate hike while they're on vacation? Or is he going to say something very open and closed, like, we're going to go ahead and raise 75 basis points, and then we're going to review the data in September? That will give the market a sigh of relief, knowing that the Fed, at least from what they're saying, is not going to be raising rates in August. You could see some type of rally kick off, but again, it has to also dovetail and tie into these earnings. If these five companies overall disappoint because of their weighting in the NASDAQ, their weighting in the S&P, these markets can easily roll over. Let's kick this off and go into Bitcoin. Oh, one more thing. The Treasury troll, Janet Yellen. So she's out today because, as you guys know, I've been predicting now for the last month or so that we are trading in a recession. Again, not a genius prediction. The Atlanta Fed itself has a negative minus 1.5% GDP, okay, for this projection coming out on Thursday. So now the Biden administration has the Treasury troll out there saying this isn't a recession, it's a growth slowdown. I told you guys a week ago they were going to pivot. That's that next pivot. This isn't a recession. Employment is too strong. Employment will always stay strongest the longest because none of these people, by the way, have ever worked in the private sector or had a boss that wasn't in government. If you ever run a small business or work for a small business, what do? If you own a restaurant and less people come to eat, do you just fire everybody? No. The first thing you do is you stop hiring people. You stop maybe your ad spend. You cut back on those costs you can cut back on. And then if you still don't pick up in business, then you let people go. People cost money to train. People cost money to onboard. So, they don't understand how businesses work, but that's neither here nor there. Let's jump into Bitcoin. Guys, on the weekly, Well worth noting here, okay? Weekly, here's the Wyckoff layout. Here's a 45 angle from the all-time high, 45 angle from the pandemic low. October 8th is an intersection. Why is that important? It's an area where if we do get some type of pump up, guys, this could be an area where if you don't have any type of velocity, this could be where you drop down, okay, to wherever level we're going to go to. It is a potential possibility. This is just TA. This market is driven heavily by data, as you guys know. I can sit here and show you bullish patterns. I can show you bearish patterns, but I promise you, if I show you the most bullish pattern in the world and Fed Chair Powell comes out Wednesday and says something crazy like we're going to go ahead and raise rates 200 basis points today and 200 next month and 200 next month until inflation's under control, no bullish pattern in the world is going to stop that market from dumping. Okay, all the markets would dump. So I'm just letting you know this is a very heavily data-driven market. These macro factors matter a lot of what happens in this marketplace. Potential Fed pivots, Fed rate hikes, guidance, earnings, all of this stuff matters. It's the world that we're trading in right now, more so than any other time period I've ever traded in the market over the last 20 years. So what I wanted to show you here, and the reason I'm bringing this to your attention, is if you look here on the weekly, Bitcoin has still been unable, even with that brief rally that we had on the last weekly candle, we haven't been able to penetrate the 200. We don't have a candle close above the 200 for 1, 2, 3, 4, 5, 6 weeks now, working on our 7th week, okay? This is a 300 simple moving average beneath us. So this is right at about 17,000. 17.1, and you just have this weakness pattern here, okay? You have a very weak pattern on the weekly time frame. To get some velocity, this 45 angle from the pandemic low, it's an ascending line. Right now, if you just pump straight up to it, you're looking at about 27K. Over here on October 8th, it gets up to about 29.5, maybe 30K. This would also be back testing your Wyckoff base if you're able to do something like this, okay? So I'm paying attention to this because, as you guys know, I have a very small market cap on where Bitcoin can go, and it's married to the daily 200. Again, I know, and I do appreciate it, guys. A lot of you guys are messaging me on Discord and stuff, sending me screenshots of other YouTubers. I know, I'm aware. I have a cell phone. I know there's a lot of people, especially those guys in Dubai, predicting everything 48K, 50K, the most bullish they've ever seen Bitcoin. I get it. The guys, that's not my shtick. I don't do that. I do realistic TA because I trade the markets up and down. I don't see any way possible at all you're getting to anything of that level, okay? Let's go ahead and look at Bitcoin on the daily. So on the daily, I went ahead and drew a 45 for this closer trend time frame here. We have Wyckoff as well. This is a 5 and 21. Again, looking to make potentially a bearish cross right here. Let me go ahead and turn that off. And then let's look at some of our support levels because Bitcoin started rolling over when I was packing today. And I'm going to take a fib retracement, guys, from that swing low, tag it up here, falling right to your 618 at 20,955. You see that? You actually got down to 20,959. Okay, so you got within $4 of the 618. I want to see Bitcoin hold this. This is the daily time frame. And what would be really nice as a trader is if you could, this could roll back up, right? If it can roll back up and give us a definitive shape to trade, we'd like to short it right there, right? That's, again, assuming this week is going to go and overall have a bearish bias to it, which in a primary downtrend in the equities markets, with the Fed raising rates, with the GDP coming out negative, I anticipate the week to have a bearish bias, but I am prepared for a pump, guys. If we get a pump, if these earnings come in good, the Fed gives really dovish guidance, and maybe the GDP, maybe the Atlanta Fed's wrong and it comes in slightly fractionally positive, I'm ready for a pump. I'm locked and loaded to go either way, as should all of you that watch this channel. So this is what we're looking at here. You're holding the 618. If you don't hold the 618, you have the 45 angle beneath you right about 19.6. So you want to try to hold this 618, okay? If you don't, I would expect us, you've already used this 45 right here. I would expect us to potentially come down to this 45 and bounce back up. But let's look at a couple things here on the daily, and we're going to keep moving this along. I'll shut up and not talk so much. RSVVB, guys, this is going to be our caterpillar. Look, I mean, we're getting ready for that move, guys. This is going to go one way or the other. And if this expands like it did here, I mean, this could be a big move. Look how tight this opening is closing up to. You see this? So if this thing expands like this could be a big move down. So let's just, be very well aware of what we're looking at here. Volatility is compressing on a very large time frame. The daily, that means that move could be coming in hot. Okay, now it could go up, but what you're doing right now is very bearish. You're rolling over and you're losing key support areas. Let's go ahead and look at money flow real quickly. Money flow is not overbought yet, but you're coming up into that range of being overbought. Our volume weighted RSI. This is Elder's force, and this measures the force behind the move. And of course, this is descending. Price is rolling over here. So you want to hold that 618, guys. It's really important. And you definitely want to hold 19.6. If you do lose that 618, you want to hold that, okay? If you keep falling down, your next level, the 1 fibs at 18,907. And then basically you're coming down to test the bottom of that Wyckoff again at 17.5. Let's go ahead and look at the 8-hour time frame, because again, this is where all the action is. For everybody that thinks the markets aren't connected, the markets, whether it's Bitcoin, Stocks 50 in Europe, NASDAQ, SPX, Russell, they're all in the 8-hour time frame. Bitcoin's the only one that's just below the 200, 233. The rest of them are all fighting or slightly above or trapped between them, okay? But in the 8-hour time frame, they're all almost in identical pictures. The markets are connected, okay? I am the Gandhi or the Buddha, I should say, right? The Buddha of crypto, the Buddha of TA and assets. It's all connected, just like we're all connected. I feel your pain, guys. I feel your pain. So let's go ahead and look at the 8-hour time frame here. 8-hour time frame. Let's do the same thing. Let's grab a fib retracement. You guys know I like fib waves, but for doing this in this accumulation market, this is really easy to do it this way too. Grab from that prior wave to the top of the current wave structure here. Bouncing off the 618, 20,952. You see that? 5 and 21, bearish cross. These are my volume weighted TGMA moving averages. And then you can see we just fell down. So again, this would be so much easier if we do roll back up, pump back up. I would like to see a retracement move back to the upside. Let's go ahead and look at the money flow is bearish, cross the median line, EMA cloud above you. The force is bearish. The force behind the move is bearish and below the median line. Let's look at a couple other things, and let's jump over to Ethereum here in a second. So looking at the Donchian, guys, we fell through the Donchian. So we went below our trend in the Donchian here. But, again, I just said this, but you really do need to hold the 618 at 20,952. Yes, there's other retracement levels. I know some of you who trade with fibs, a lot of people like to use 786, 886. I use the primary fib structure. These are the fib numbers that are divisible, one step divisible from the golden ratio, okay? So the other additional fib numbers require an additional calculation, but these are your primary fib structures. I call it the Fisher method. That's who I learned Fibonacci trading from. And let's go ahead and look at Ethereum while we're here. Ethereum on the 8-hour pulled the fib already, guys. The same exact method. If you want to do it at home, put it in Wyckoff. Very easy to do. Very defined distribution range here. You fell through your 200, your 233. You see how Ethereum split the two. This is the 8-hour time frame. Ethereum split the two and is holding the 3 to 2 at 14.12. The 0.5, which is on it right now. These fibs are extremely accurate for the way the markets are trading. The low here is 14.11. The 3 to 2 is at 14.12. 0.5 at 13.34. 618 at 12.56, guys. If you're going to do a 100% retracement to that move, you're going back down to $1,000 Ethereum. So money flow here, we just crossed into the bearish area. EMA support cloud is on top of us now. It is resistance. Printed a double top here on the EFI, going down into that bearish, almost oversold zone, but not quite. You can get pretty far down there in the Elder's Force. So, again, with Bitcoin rolling, Ethereum's going to roll. Most of the altcoins are going to roll. You guys requested Ethereum, so I wanted to be able to show it to you. Let's go ahead and look at the RSVVB here on the 8-hour. Let's see if Ethereum's bottling up too. Let's get some comparison here. You had a tight bottleneck here, and you did get some expansion, but it's already bottling up again. I mean, all these markets look like they want to move. I mean, this week, again, should be action-packed. Today was basically nothing. Walmart sold off. They fell off about 10% after hours. They cut their earnings for the rest of the year. They said inflation is heavily impacting the consumer. The consumer's not buying higher margin items. They're concentrating on food, toiletries, personal care items, which don't have a large enough margin for Walmart. So Walmart suffering, therefore Target, Costco, all that retail sector started coming down after hours. Very interesting time to be trading, guys. Let's look at the daily. Or this is a 4 hour, 4 hour for Ethereum. Again, Wyckoff, this is a fib wave projection, the way I normally like to do it, as you guys know. And you can see you're landing at the 1618 at 1405. And again, you got down to 1411, so about $6 off. But what I wanted to show you this because you have your 200 down here in white and the 233 up here. Your 200 is at the 1246 level, and your 233 is moving up to that 1405 level. It's slightly below it at 1384. So you want to see this bounce off that if you do lose it. Money flow again is bearish here. Volume's not bad on the 4 hour time frame. How's volume on it? Volume's okay. It's average. It's all you got. You got some average bars. Nothing too fantastic there, guys. Let's jump over to the stocks 50 really quickly. Daily time frame, we kissed the 1618. Remember, why are we tracking the stocks 50? First of all, you can trade this on SimpleFX, okay? I personally want to short the stocks 50. Again, one of the guys that I follow very, very closely, Ray Dalio, he's a market historian just like Jeremy Grantham. Both of them are billionaires, by the way. Both of them have their own funds. Ray Dalio has the largest hedge fund in the world, Bridgewater, which happens to be up 36% on the year, as almost everybody else is down, okay? Dalio has 10 billion with a B in shorts on the stocks 50. This is why I'm tracking it, because we can trade it on Simple. I want to get in on the action because he just initiated these positions in June. So since June, we've gone up. They were up here, they came down, but we've gone back up with the markets rallying. So I'm tracking this closely because Europe is going to be in a pickle. Russia just cut down from the Nord Stream 1 pipeline. They're now offering half the amount of gas they originally were offering. I think it's down to 20% now. Originally, they were going to offer 40% capacity. Now they're down to 20%. I think they're saying it's a technical problem or whatever, but trust me, I think they're doing it to punish Europe most likely. And so anyways, Europe is going to be coming into a lot of headwinds, a lot of crosswinds. Lots of people do believe Europe is going into a deeper recession than America, which I don't think is possible because America printed more money than anybody else. So we'll see. But regardless, suffering is suffering. And if there's money to be made on a declination, I want to do it. So we hit the 1618, still above the 50. This is going to rally. I have a feeling this is going to rally. I haven't done deep dive research on this, but if the S&P and the NASDAQ rally, I have a feeling stocks 50 is going to rally, right? And if they don't rally and they dump, I have a feeling we're going to dump here. I'll have to do an overlay when I get more time. Volume here, again, is below average for the most part, but that's just like the U.S. indexes. So tracking this, staying above the 50 daily moving average. This is your 45 angle from your all-time high. Kind of my peak resistance here, but we already did hit that 1618. Want to see what the earnings do for the rest of this week to see if the stocks 50 starts rolling back over, because if it does and it exits this Wyckoff trading range, further dissension will be there. Looking here at the 4 hour time frame, did a mini cough structure. 8 hour time frame, you can see your 200, 233 again knifing across the top. So this doesn't look too bad. I mean, you got your double bottom just like all the markets did in the US. You bounced up and you're trying to hold this trading range accumulating. So we'll see if this gets anywhere. Do I have the RSVVB here? Yeah, let's see what it's doing here on the stocks 50. If we have expansion, yeah, we got some. This is look. The mimicry is great because this is the size of the expansion you can get. We got whatever that is, maybe 30-40% of that after this little bottleneck. So very similar to the U.S. markets. And let's go ahead and turn that off. And money flow is still on the support, still above the median line, still bullish. Elder's Force is still in the bullish area, pretty flat. Both have printed a double top type pattern here on the oscillator, so we'll watch that. S&P, guys, the broader market. Daily time frame. Now, the U.S. indexes are low volume, okay? Very low volume, only one average volume bar in like the last week. So very low volume, staying on top of Wyckoff though, but you get these volume divergence rallies, which is what we have going right here. Guys, if you throw Ichi on here, I mean, you can see how closely this is tracking, right? So let's throw Ichi on here. You're coming right up against the cloud. The cloud does dip. This could knock price down, but we might get one more little pump up here, which would be great on the daily time frame to print a double top type structure and make it easy to trade. But this is going to depend on the earnings this week and what Powell says and that GDP report. You know, it's crazy, and I tell people this all the time, but half of trading really is market psychology. Market psychology. How is the market going to react to what Powell says? Because we've had whipsaws the last few Fed rallies now. We've had whipsaws. How's the market going to react to being in a recession, a technical recession with 2 quarters of negative GDP? Because all the FUD that's being spread on TV is, oh, it's not a real recession, it's a gross slowdown. I mean, this is all being said on TV, guys. So, you know, I don't know how the psychology is going to play out. But, you know, the technicals, and this to me looks definitively like a bear market rally, a dead cat bounce bear market rally. But in these rallies, you can have strong upward movements. Your 200, 233 are above you. Your first one here, what is that, the 100? That's at 4,100 roughly, 4,117. So you could rally up to that and then die. And if you did get above to that to the 233, it's at 4,189. I don't see it going beyond that. I don't see you getting out of the S&P Kumo cloud here. Could be wrong, but you have no volume behind the move at all. You have thick resistance above you. Got to see the earnings. Let's go ahead and look at the S&P on the 8-hour. All the actions on the 8-hour, guys, 200, 233 knifing through. You did hit the 1618 at 4,014. I had that 4K target. And you did print a little disjointed double top, but you are on the top of your Wyckoff trading range. So got to pay attention to this volume here on the 8-hour time frame. You have a few average volume bars here. The markets are all anticipating, guys. They're all kind of just paused. They're just waving back and forth up here. They're waiting to see these earnings reports. This is a big week for earnings. Looking at the NASDAQ, I mean, look how the NASDAQ's behaving with that Kumo cloud. That's ridiculous. Look how accurately that's tracking. It's just kissing. Once you try to get up and got rejected, it's just kissing this and rolling back down. All of the markets are doing that. As you notice that the S&P, the NASDAQ, they're all just kind of rolling down, may roll back up. Again, love to get a double top structure that we can trade. So love to find something, so a peak resistance here, get a fib wave projection, see if we can roll up something to give us a target to short. NASDAQ obviously wants to hold this upper area, roll down, guys, come up and get your pivot, right? That's what you want to get here. So once again, very thick resistance over here, thinner resistance, and this is in late August. I think we get rejected. I've been saying this over and over again. I think we get rejected. We're going to go down to the weekly 200, 233, which I believe is a 10 or 11% drop for the NASDAQ, a 9 or 10% drop for the S&P. And then we can get a good rally. 8-hour time frame, you can see what the NASDAQ's doing. It's done this exact same move, splitting the 200, 233. That's our volume weight at 233. But you can see that it did this with a double top, okay? So we do have a disjointed double top type structure here. If you did break your neckline, which happens to be at your 382 at 12,208, you would be coming down. The 0.5 at 12,064, 618 at 11,920. You break that, you're back down in this bottom trading range, around 11,455. Looking at the Russell, guys, Russell, same exact thing, Wyckoff structure, rolling over here on the daily, going to see if we can hold that. Let's look with Ichi here on the daily for the Russell. Go ahead and throw this on here, right into the cloud, just like the NASDAQ. And just like the NASDAQ, August 31st, this really starts to thin out over here. You could see if we can get, if price does roll back down, I think it'll fall down and come back up, but it's going to start to thin back out over here, and that's going to be your rally juncture, okay? Your rally point, 8-hour time frame, exactly like the NASDAQ. Look at this. NASDAQ, you have your top, first top, second top right now. Like to see this push back up, give us a bigger peak, hit that 233 and the volume weight at 233. That would be great. If not, we shall see how this plays out. Again, Everything is based on earnings. Money flow is on the support cloud in the bullish area. Elder's force is in the bearish area. Not a lot of force behind the move, which is why you have all these candles just kind of sitting between the two moving averages. Let's look at silver, guys. Silver hasn't changed a lot because I'm looking at this on the weekly time frame for obvious reasons. Wyckoff ceiling, Wyckoff base, inverted cup right above your 200, 233. Price rolls down, lands at 1823. You can see that right here. Got it almost exactly on it. The low was 1814. You got to 1823. But I anticipate, like I told you before in the other commodities videos, as the Fed continues to raise rates, and the market continues to believe the Fed is fighting inflation, you're going to see the potential for silver to come down more. That 1618, the golden ratio phi, is right there at $12.85. You can see that lining up perfectly with the pandemic crash, okay? And looking at gold, we got that little bit of a bounce off of this down thrust, but this isn't a very good bounce, guys. You did not get a lot of upward momentum, and this is a weekly candle, again, because I want to show you this because the 200 and 233 are below you. So if you lose the 200 and 233, which is roughly 1660, 1650, right in that area, you lose the 1 fib at 1672, you're coming down to the golden ratio phi at 1425, okay? Now, this would be your pandemic lows because that's what this area is right here from 2020. Okay, so phi is bringing you right back down there. Now, Snapchat was back down at its pre-pandemic lows, or in the pandemic lows. The metals may be heading to their pandemic lows. We have multiple stocks that have hit their pandemic lows. Some of them prior to the pandemic, like ARK. ARK went back at one point all the way to 2018 as far as the price of the asset. So, you know, again, these are all areas that I think the broader market is going to eventually get to after we have our rallies, our pumps, our dumps, all that fun stuff, guys. But you need to hold 1672. That's your line in the sand for gold. Got to hold the 200, 233. If you lose 1672, you lose this. You have a bias to come down the phi at 1425. Looking at oil, guys. Oil, you know, we had our peak up here at 130. You know, we've had a lot of volatility. The 45s intersecting here. Oil did fall below its 200, 233 here on the daily, but pumped immediately back up. But you have a steady downtrend, as you can see, right? You have a steady downtrend in effect here. So this is just something you got to be aware of. And this is the commodities traders pricing in a recession. You use less energy in a recession. I think oil will still have another run up. That's important to note because we have winter, we have European shortages and issues over there in Europe. Let's go ahead and take a wave projection from here, the base to the top. Looking at your 618, you're at 103. Oil's trading at 99. I'm not interested in this range. If it comes back down deeper, I'm more interested. But again, we have so much negative news with recession and everything coming out. Oil could easily come back down and break its 200, 233 again. Want to hold this 45 support line if we do descend, and that could bring you down to the low 90s. This did originally get down to $90.95. So want to watch this. Not interested in trading it at the moment. Looking at natural gas, I mean, this trade was sick. So we got members in our room that have been with us since almost the very beginning. And I know off the top of my head, 2 of them got in on this trade. Okay, 2 of them got in on this. They spotted it for themselves, and they got in on this trade. I'm really, really happy for them because this is a parabolic run up. So much of the economy, Germany is the 3rd largest economy in the world. A lot of their energy comes from natural gas, which was previously supplied by Russia. Russia has a stranglehold on that supply, not giving them as much as they need. Obviously, there's politics and all types of things involved in that. But natural gas is just skyrocketing. I mean, this turns out to be an even better trade than oil. Clearly, look at that uptrend, parabolic. Looks like an altcoin. What you want to see here too is if you do end up getting a double top type structure, okay? Because you're at resistance right now, right there at the 45 angle. You just got above it, but I don't anticipate this coming back down to break a double top. But it could be how it ends. You know, at some point, the bull run in energy will end. Everything ends. It could be if we're in a deep recession, which, by the way, people keep asking me about the metals. The metals will do well when and if the Fed does pivot and inflation has not come down. Because if the Fed pivots and stops raising rates and or cuts rates and or prints more money, I think you're going to see a big rebound in the metals. But for right now, the markets believe the Fed. And guys, I'm going to wrap this one up. This one went long, but I had a lot to cover for you. And I'll get another video out for you. Hopefully tomorrow. I'm traveling again tomorrow, but I'll get that out for you in the evening again, most likely. Have a fantastic day. Watch those earnings tomorrow, guys. Microsoft and Google. Those are two very important companies. All right, guys. Talk to you guys tomorrow. Peace, everybody.